Hey, welcome everybody to the 40 Finance channel. Check it in here on this live stream on a day when the NASDAQ closed 2.5% down. Even the Dow, looking at it now, took a 0.5% dip, and S&P 500 minus 1.42 at close. So we know everybody promised volatility this year. It certainly is starting off that way. And for kicking off today, I just thought I would share a few events I see coming up in the short term. I think all of these are 30-ish days down the calendar where we could see even more volatility. So if you think things are shaky now, you may want to hold on to your money and consider waiting for some of these storms to pass to see where stocks land, because I think all three of them will have some sort of impact, either positive or negative, on the stock market. So let's go ahead and jump in, and I'll share the first event here. Let me adjust my cameras. All right, so the first one that we have here is the FOMC official meeting on January 25th through the 26th. And if you're not aware, this is the FOMC is the Federal Open Market Committee. They hold 8 regularly scheduled meetings during the year. They link to policy statements and minutes, they make policy statements. And the big thing that comes out after these is usually on the 26th, after the second day, approximately 2 or 3 o'clock in the afternoon. Jerome Powell will be out there answering questions and talking about when these interest rate hikes are going to go into effect. So I see this as a pretty big day. Now, I forgot to look what day that is. 1 second here. Check my calendar. The 26th is a Wednesday. So I would mark your calendars for an interesting day on Wednesday the 26th. You know, we already know what it's going to be, right? Yes, interest rates are going up. We've been talking about it forever. Quarter point increase 5 or 6 times this year, you know, depending on who you believe. But the fact of the matter, and what makes this very first one so important, is no one's done it yet. They continue to talking about it, and no one's come out and said this is happening. And that's why I think that's going to be a major event here in Q1. Now, the second event was probably one that you were thinking about, and that is earnings, okay? So earnings is not really a day, but the first big earnings that I could find using this Tip Ranks calendar here was on January 20th, which is 7 days away from today. Netflix will come out. And not that Netflix is, you know, the key to the whole world, but I think it will give us our first glimpse into consumer spending and whether or not we have people who are cutting things in light of inflation, whether big tech companies can continue to grow at outstanding rates. Netflix will be our first sign for that. And we'll get more official metrics, if you will, on Tuesday the 25th, because on this day, we have Microsoft, January 25th, and I thought there was another one on this day. No, that's later in the week. Okay, you got Microsoft on the 25th, Tesla on the 26th, Apple on the 27th. This will be huge because right now Apple is projected at single-digit growth for next year. So if you're bullish on Apple, of course, and like they've done so many times, you are looking to outperform what analysts expect. I think Apple is a very intriguing earnings report to follow coming up here on Jan 27. Then you have Google on the 1st. It'll go on and on from there. So that is the second date or event, earnings, and it kicks off again. I think it kicks off myself with Netflix on the 20th. Yes, we've got banks that will come in prior to that. You had Taiwan Semiconductor actually release earnings today that were positive. But I'm most interested in consumer discretionary and to some degree consumer technology. And when I say consumer technology, it's just, like Apple is kind of sort of tech stock, but it's also, very deep in consumer discretionary trends. Microsoft's important because of enterprise spending, particularly CapEx. What do these CEOs see in 2022? They're going to have to say it. Don't forget, during the pandemic, and I would argue the first half of 2021, a lot of CEOs took the high road. They came out and said, you know what, pandemic, too much stuff's going on. We can't project. We can't project numbers in a world like this. And it turned out everything was good. Well, those kind of days of excuses are over. And so I would suspect that, Microsoft, Apple's, anyone in that realm is going to need to step up and give us some sort of insight for 2022. All right, so that, our first event, if you're just getting here, was the FOMC meeting on Jan 25 and 26, most notably the press conference on 26. The second event that will move stock prices undoubtedly are the earnings reports. I'm suggesting that Netflix is the first of the big kickoffs, certainly by Jan 25, when you're in there with Microsoft and stuff, the whole thing's going to spin from there. All right, so what's the third event? And it has nothing to do with stocks, right? But the Beijing Winter Olympics, February 4th through February 20th, 2022. And no, we're not going to talk about bobsledding. But if you've been following the background of the Olympics, then you know that it's turning political very quickly. And I believe, don't quote me on this, the United States is basically withdrawn, but their athletes can still participate. And there's other countries just like that. And we also know that China has had some interesting dynamics in the stock market as far as, rumors of delisting, stuff like that. So if somebody's going to make a statement politically, then it would appear that the Olympics would be a prime time to do that. And I personally feel that international politics are in a tough spot. Not just with COVID, but just with just competition in general. So I see the Olympics as potentially a place where we could have stock market volatility if something goes wrong or a surprise announcement comes out. Neither of those scenarios would surprise me, just to be 100% honest. All right, we got Lion here. Good to see you. Lion, I've got a freebie to give you. I tried to find your email address. If you can email me, Jeff at 40Finance, and somehow make me know it's you, I've got a freebie for you that I think you'll like. All right, we also, and by the way, Lion says jobless claims weren't bad at all. I agree. The jobless thing, I don't even see that as that important anymore. We are recovering from obviously the pandemic lows. These claims inch up. Frankly, I think that we're always looking for negative news, but the problem was 2020 was the problem. If anything else, at this point, I'm not worried about people having a job opportunity. I'm worried about people going back to work, right? So the media makes a big deal still of these jobless claims because no doubt those were huge headlines in 2020. I just don't really see them as a big deal anymore. In fact, I would argue that if you're in any sort of hospitality, warehouse, anything where you need a lot of people, transportation, a lot of workers, then you just want to get people in the door. And I think that those wages here in America are starting to become attractive to get the people in. So we'll just have to see where it shakes out. But I'm definitely not worried about the number of jobless claims. Look at DraftKings, huh? Now, I didn't have a chance to get on DraftKings today. And by getting on DraftKings, I mean looking at it today. I will be on DraftKings this weekend for the NFL playoffs. If anybody is an Eagles fan out there, I'm in Cincinnati, Ohio, but I do root for the Philadelphia Eagles and the Cincinnati Bengals. Bengals just because it's hometown, and it's always fun in Cincinnati when the Bengals and Reds are doing well. So let's see. Lion says... Yes, okay, Lion says that they had some good news. This Oregon lottery thing, even though it's Oregon, which is a relatively small state, this is big because it does set up, there's a lot of state lotteries that are going to be running sports books, right? So if DraftKings can get in at this level in Oregon, but, maybe perhaps... do it at a larger state, this is big news. I'm still huge on DraftKings. I will buy into this dip that we've seen. Where are we at now? So here's your 6 month. This was football season. We knew football season, the anticipation was going to be high. And here we are now. No doubt you can expect... to stay invested in this one for returns through next football season. As most of you guys know, my bull case for DraftKings has barely started, right? You've got, I think the last time we looked, it was less than 20% of the USA population is legally eligible to gamble. So I'll partake in this, but I'm not in a hurry given the current environment of where we're at. And heck, even Morningstar, which this kind of shocks me to be honest, gives it a fair value of 44. All right. Who else is on today? DH, how you doing? I want to buy the Affirm dip. And I've been watching Affirm. Let's bring it up. Affirm. I have no problem with this Affirm dip because I thought it was woefully overvalued for a company that is still, obviously not profitable. They just came out. I'll give Affirm this, though. So impressive on this revenue growth. $800 million in 2021. $1.27 billion is this year's projection, and adding more than another $500 million to that next year. I just wish these numbers in this current environment were closer to positive, right? So I always, in my mind, say if you had $1 EPS and you multiplied it by a forward PE of 100, that would put Affirm at $100. So they're basically riding a PE right now in the 2 to 300. I don't know if it works that way, actually. I'm just staying away from negatives. Let me not even complicate the math. I'm just staying away from negative EPS for myself in this environment. However, they, as a company, have a lot to be proud of, and I agree with you, DH, that the partnership levels are getting impressive at this point. All right. What's going on, Andy? Thoughts on Melly and Unity? They look interesting. I'm watching Melly very closely. I really think that the buy point is under $1,000, but I don't know if it gets there. Here's the catch that I see with Melly, and one of the reasons that I'm not hand over fist on it. So, and then we'll get some of this in fourth quarter. The bullish case, which I think is priced in, is right here when they hit this $9 EPS, right? So analysts have this range that's kind of like Google, Amazon-esque of growing their EPS. Like this is huge. 3x growth on the EPS line if they conform to this estimate. That puts it in a really nice position. We know they're going to do sales. I mean, they're in a country that basically has zero freaking e-commerce, and they're knocking on the door of $10 billion next year. I love the story, but I don't know if I trust the EPS projections because they're so high, and I would have to be guaranteed the $9 to buy it at this level. And then the other thing is, Andy and everyone else, that I'm not very good at, and that is the currency, the Forex of it all. How does the currency translate in the economies, quite frankly? I've never heard that the Brazilian economy is awesome, right? Nobody ever says that, and I think they have some currency problems, and I don't know what that does to the stock, okay? I'm not smart enough to know that. So whereas if this was Amazon, a budding Amazon, and everything here was USD, and we said, look at what Melly's doing here in the United States, look at this possible EPS growth. I think that that's not an unheard of price at 1100. I think that the target for me would be probably 900. That's that $9 times 100 to start a position for the long term. So that's where I fall. Now on the flip side of that, okay, Shopify is getting very interesting. It's hovering under or close to 1,000. I think it has potential to go below that. Their Q4 report will be interesting to see. Do they align with this number, 864? It's not a huge step up. I could see this being a 9. And so if you got to 9 times 100 is 900, then all of a sudden you're basically there, right? You're within 10% of it. So I've got my eye on Shopify. Similar, I don't know why they don't have this year's growth. This year's growth was huge. I don't know what the number is. Next year, still looking about 33%. Let me grab a drink here. Oops, sorry. Let me switch this back. All right, so that's my take, Andy. Oh, Lion likes the Cowboys? Jeez, that's disappointing. Disregard the offer to email me. Just kidding. Cowboys look tough, man. The Cowboys look tough. I will not count the game against the Eagles, though, just because of the staffing. You guys were playing starters. We were playing nobodies. I was thinking when Minshew came out and drove them down, I was like, heck, maybe they'll make a run because Minshew has a lot to play for to try to become a starter somewhere. But didn't happen. And eventually, when you got scrubs in the secondary against Dallas wide receivers, I mean, it turned into what it probably should have turned into, which was an absolute rout. But good luck in the playoffs, Lion. I say that semi-sarcastically. I like playing the Bucs. I know that sounds crazy. Super Bowl champion Tom Brady, whatever. But with those receivers being down, I'm not predicting an Eagles win. I'm just going to be rooting for them. But I like playing the Bucs because I think, frankly, I'll take Brashard Perriman as my guy I've got to cover way over Godwin and Antonio Brown, right? So we'll see what happens. We'll see if they can get lucky. And then the Bengals, that'll be interesting. That'll be the first home playoff game for Cincinnati. Well, they played Pittsburgh at home relatively recently. But obviously the Bengals have sucked, right, for a decade plus. So the whole town here is, of course, going crazy. So that's big. That's tomorrow at 4:30 Eastern time. If you guys like the NFL, I think it'll be a fun scene here in Cincinnati. And, hopefully they beat the Raiders. I look back, they played the Raiders earlier this year, which I had forgotten about. It was like first half of the year, and they stomped them at Las Vegas. I didn't dig in to see who was injured and who was playing, but that obviously bodes well now that they're playing at home. DH, Bengals will go all the way. Nice. So DH, wherever you live, that is probably, and this is what I want in Cincinnati, right? I don't want to spend $1 bazillion gambling, but I'd love to open my DraftKings app, right, and put $20 on Bengals going all the way, because that has got to be for, I don't know what the odds are, but it's certainly not 2-1. Let's see if I can find it. I know we're getting off topic here, but I'll just look for it real quick. Super Bowl odds. And we'll just trust the sporting news to give us realistic information. So Bengals all the way down here, plus 1,700, right? Eagles down in the bottom tier, although not as bad as the Steelers. So that would be fun, I think. I don't know if you agree with me, DH, but that would be fun to take these bottom teams, right? Put $20, maybe $100 total, and just hit like maybe Patriots, who always outperform expectations. I think the 49ers have a better team than most people give them credit to. Hell, this Cowboys odds is probably worth your time if you're a fan, right? Funny enough, the number one team, I wouldn't want that bet. I don't think the Packers are as good as people give them credit for. We'll see. I might be eating my words here, but that's just my 2 cents. All right, Lions, glad he's not in Shopify, but it is because it's getting clobbered. I agree, but guys, are we getting close? I think we're getting close to fairly valued, is what I would say, right? And that'll be one of the topics for a video coming up here in the next couple days. I am not going to say that stocks are on sale, because I don't think that they are on sale. I think we are approaching fairly valued in terms of earnings. The huge catch, and the reason that I kicked off with like the 3 events or whatever I did for this video, is the fact that, man, when these earnings reports come out, right, Netflix is going to stand on the stage. They're going to say, we did XYZ in fourth quarter. I have no doubt that it'll be a great quarter. But then they're going to say, looking ahead to 2022, here's what we see. And analysts are sort of swimming naked at this point, because they're making projections based internally on their research. Now the CEOs are going to come out and they're going to say, this is what we see happening. And some of these companies, the market is betting they're going to go the other way, right? So we talk about Apple. Bring it up here. Okay, Apple, they have a little more growth here, 574. Maybe they hit 618, but will Apple say that this is approximately correct, or will Apple say that this is down? And it really wouldn't surprise me if they say this is down a little off of that. And this number, the sales at plus 5%, it wasn't 2 weeks ago that this was at 1 or 2%. So people are coming up with their analysis. Let me see the EPS trend. All right, EPS trend. 90 days ago, under $6. So that's going up. And I'm not picking on Apple. I've picked on them before when I thought they were going to slow down, and they proved me wrong. It wouldn't surprise me if that happens again. How about Google? Where's Google at next year? Only adding $4 of EPS seems interesting. Only, right? Plus 17% coming off of plus 40. Somebody is in for disappointment. Or, Google comes out and says things couldn't be better, and this number will skyrocket, probably closer to these levels. So I think that this is one of the more interesting earnings periods for everything I just said. But most importantly, when you're sitting through your earnings, and you guys have been in this game long enough, frankly, the report on last quarter is almost like, meh, doesn't matter. Like, hit it, get close to it. The bigger thing is the guidance going forward. Always is the guidance going forward. So when you have, let's take Amazon, one of my stocks. If they crush fourth quarter, yes, that's good, and hooray for us, right? But at the end of the day, we're waiting for that, and it's the new CEO now, I can't remember his name, to say, what is 2022 going to be like for Amazon? Are you guys going to spend a shit ton of money again? Are you still spending money on infrastructure, etc.? And that's going to be where that stock goes. And to be honest, I'm not sure where it'll land. I feel very good for all these Google, Alphabets, Amazons. I feel very good for the next 5 years. I think you have zero to worry about. But in the short term, some of these stocks are going to go down because the CEOs are going to say, you guys think it's going to be $6 a share EPS? No way. It's going to be $4.50. And then that's going to send them spiraling. And of course, the people with the most pressure are going to be the high flyers that have no earnings, right? CrowdStrike better come out and say something really freaking good because they're heading down. And so is Cloudflare and all these other ones I talk about all the time. All right. Wish I held on to TSM, man. That was some good news for me today. To be fair, though, since I'm nitpicking on earnings, I don't know what's left in that one. All the semis, I could see downside for just about anyone else in the semis right now, whether it's NVIDIA, MU, AMD. It wouldn't surprise me if they went down a little. This was a great report and a lot to be proud of. And in fact, it was 145. I thought it was higher than that today. Let me see. Yeah, 145 at 9:45 when the market opened. Then it's kind of come back. It's a nice leg up. I think it puts me at plus 50% on my holdings. But, would I buy it at 138? I don't think so. Not in this environment. I don't think you buy anything on the green ups in this environment. I certainly am not. Now, I did buy 2 whole shares of QQQ today because it bounced into the 370s again. And I'm perfectly fine with that. In fact, I'm looking at it right here. Still dripping at the after hours, 377. This was an ETF that on January 4th was 401. And I don't think many of us here are surprised that it went down from there. Started to come back, but here we go again, right? Here we go again, back to the downside. And I think that cost basis ended up not being that important last year. If you were selling at peaks, you could have bought in on almost everything because everything was going up, and you could have bought halfway through and sold at the top. But this year, the S&P is projected, whatever that means, projected at about 9%. So if you're going to win the year in any sort of contest or whatever, you're going to have to buy dips in order for your 9% to grow to 13, 14%, if that makes sense, right? So the 9% for the S&P starts with Jan 1. So let's see where we're at on Jan 1. I don't even know. But you got to factor this into your calculations if you're trying to outperform. So, no, that's not it. Right here, is this the first day? All right, Jan 3, 476. Okay, so if you bought on Jan 3, the first trading day, your basis is 476. We are now down from that point, right? So what I'm talking about here is you better get your 464 and potentially even further down. If you did this, 458, you better be buying that, or else you're not going to hit your 9% if the S&P actually gets it, right? 9% on top of 4, whatever we said, 9% of 476, you'll have to help me. Let's just say plus $40, right? Is 517 something ish. That's what you got to get to, but you can beat that. If that's where it ends up, you can do better than 9% by taking advantage of the volatility and bringing your cost basis below the starting point of Jan 3. Easier said than done, right? All right. DH, Mercado Libre, P700, yes. So that's the kicker. Earnings right now, if they hit Q4, $3. Okay, that for last year. The momentum is the projection for next year, where they're trying to 3x that on earnings per share. That's not easy. We'll see if they can do it. I think that that's probably on the high side. It would just be my initial take, and I could be wrong. And then don't forget, if you're getting into Melly, I would recommend spending some time on exchange rates and trying to understand what these economies down there are doing, because they're not pretty, is my understanding. Brazil had the World Cup, a year or two ago, something, I don't even remember. And it was pretty bad as far as the camera scenes from the street, as far as how people were living, away from the touristy areas. And those are the people that are using Melly, right? So just get a feel for it. They have a lot more economic concerns than certainly we do in the United States or Canada, even some of the most populated European regions. Frazier held TSM, good for you. Congrats. The big problem is the U.S. can't control inflation without causing another financial crisis. And I agree with that. We are, the numbers don't lie in terms of balance sheet and stuff. I don't know how the government pulls it out of their butt every single time, but they do. I trust them to do it. And I think you have to be careful living in fear of a financial crisis. That's one of the lessons I certainly took away from the pandemic, was depending on how low things go, there's a certain level where you're like, screw it. If it goes much lower, we're all screwed anyway, right? I chose to hold from the pandemic low through about mid-April. So if the pandemic low was whatever, March 20th, I don't know, in 2020, I didn't buy anything until, call it April 20th, right? So I missed the first month when stuff started going up and, rallied from there. But there's probably a line in the sand where you're like, things look so bad that we're all screwed anyway, right? If there is a major collapse of world currency or United States currency, I don't even know if stocks matter anymore. I don't even know if your money matters anymore. So you just have to figure out what that line is for you, and you know, are you gonna take a chance? All right. Do DraftKings winnings have to be reported for taxes? Yes, they do. It's here in the United States, anyway. So any casino type entity, I think how it would work for winnings anyway is there's that threshold. I believe it's $600, very similar to a 1099. And if you get over the 600, they're going to send you that form. Okay, now the catch is, and the way to balance that is it is net winnings, right? So if you spent $600 to win $600, you're effectively flat, no taxes, no reason to even report the income. But as soon as you spend 600 and win 1201 or somewhere in there, now you've got some forms coming to you. So you can write off your losses, but you cannot write them off above the amount you won. There's no tax refund for losing all your money on gambling, right? But you can take away the cost of the wager and the information that you use. If you use like a research site or something, you can write that off towards your winnings. What's going on with Rocket? Yeah, long-term 5-year, that's where I am. So my take on all my small caps, which are just brutal right now, Rocket, Magnite, even Saber's getting a little bit of a bounce back with airlines getting excited again. Anything that's in that Russell 2000, I'm ignoring it. I think that there's bigger wins to be had playing this blip on the radar for the mega caps and large caps that have earnings. So I am not selling my small caps, but I'm essentially ignoring them right now because I think that the better opportunity is in the guys that are going to hold up almost no matter what happens. Not selling Rocket. I will eventually average down, but on a priority list for me, it's way down there. I mean, I have to look at what I even have, but that's how I'm playing those. Who else is small that I still own? I would argue the same thing for DraftKings now I look at the list. So DraftKings at 24, I probably should be buying it because I'm in the 30s, low 30s, but I'm just leaving it because it could go down farther. I'm not selling what I own, but you know, I'll be happy to add later. And if it means I don't get the full spread on it, it's okay. You know, there's bigger wins to be had right now, depending on what your favorite stocks are. I'm new on this and scared to lose 4,000. Scared to lose 4,000 already. So I don't know if you're losing for Mr. Aguilar. I don't know if you're losing for or what's going on, but I'll take Lion's advice right underneath. Buy an ETF. And I think that that's good advice, and I'll go one level higher, and I'll say, if you still have this 4K and you want to invest, I think it's a decent time. Just go for the SPY or the VOO, whatever you want, and put it in at a little bit at a time. We call it dollar cost averaging. If you ever see DCA, that's what that means. So don't invest 4,000 in one day, certainly not in this environment, but just get used to it, man. Just throw a couple hundred a week or whatever you're comfortable with. But I would suggest in the current environment that you are spreading out your 4,000 investment. If that's your life savings, spread that out between now and July. It'll make you feel a lot better. But I think you can do well because as opposed to getting in last year in, let's say, July, we've actually had pullback. And, this all assumes you're holding for the long term. All right. bought 20 shares of SCHD, which I'm not sure what that is. Okay, so you did. You bought Schwab US Dividend Equity. Know nothing about it myself, but there's no reason that that can't do well for you over time. Looks like you got a 2.89% yield, so you're going to make money no matter what. And, you know, there's your 1 year on that. There's your 5 year. I mean, it certainly looks like it performs well when the market in general is going up, right? So that's a good one. It's a good start. You can even get less specific and, you know, put something next to it like the SPY or the, you know, a world fund or something like that. But you're doing the right thing. Just get, you know, even if interest rates go up, we're all screwed because they're going to go up a quarter point. We know what's going on with inflation. We know that the best savings accounts in the world are probably paying 2%. I don't even know if they're 2% anymore. It's probably more like less than 1%. So you're doing something to prepare for your future, and that's the start. Don't get sucked up on any of these YouTube channels about hot stocks and whatever. I just don't think it's worth it. I think you want to have a base for your 4K, would be my opinion anyway. All right. Lion, I've said it before and I'll say it after. The GOAT investor is holding $145 billion in cash. Warren Buffett. This is very true. I didn't know that it was $145 billion, but we know that people like him are always smart enough to have, they're not buying at these highs, right? They never do, unless, you know, a company is struggling and they pick them off there. So Warren Buffett, it's funny how like he's coming back in style in a big way right now. A lot of people took their shots at him during, let's say, 2020 and 2021 when the market was in some bizarro world that he wasn't participating in. But at the end of the day, man, look, bank account, right? Scoreboard. I don't care what you did on your AMC stock. Like Buffett is blowing you away. Just purely on his Apple dividends, right? If you go dollar for dollar. So you'll never hear me speak bad about him. Victor just saw me. Yeah, right before this, I was on Yahoo Finance. You said CNBC, unless they put it on there, I can't imagine. But I did a quick bit on Yahoo Finance. They reached out because I did that oil stock video. And I was like, well, I'm not really the oil stock expert, but I'll give you my 2 cents. And then they went into the meme stocks, and they said, apparently this is the anniversary, or very close to it, for AMC and the other big one, GameStop. And you know what and they're like, what do you think? Can it ever happen again? And I'm like, I don't know about that, but I'll say for the record that that was the greatest win in retail investing history for the small guys, and it's still going on. And I don't know that it's going to end necessarily well from here, but the smartest people who were behind that have made their money. Hopefully they're smart enough to sell out. I don't know. I never played that game, but that was some serious power to the people. And even though I didn't partake, it made me smile each time. All right, DC, Russell 2000 picks are Russell 2000 small cap riskier picks in a taxable account or in a Roth account. At what percentage is cash? So I'm trying to think if there would be a difference. Or riskier difference. I don't know that there is, except for the fact that small caps are generally significantly more volatile than large caps. So I would be inclined, or how I do it actually, is in my retirement accounts, it's all ETFs and big dog names, right? Because this is a retirement account. This is built for 20, 30 years. You're not trying to come up with who's going to invent the next electric vehicle, right? These are things that hopefully you're logging into 4 or 5 times a year, right? Just to make sure nothing exploded. Small caps, in my opinion, for the way I do things, would be much more likely to land in my retail/taxable account, only because most of them are going to need constant monitoring. That doesn't mean every day, but it certainly means like, hey, if you bought, how about what I bought last year, Magnite last year in the 30s, and now it's 15, I need to know that. It doesn't actually change what I'm doing here right now, but I don't know that Magnite is a stock for a 20-year account. I really don't, because I'll tell you what, as soon as I double my money on it, then that's taking much longer than expected. But as soon as I double my money on it, I'm Gandhi. I'm not dreaming of 100x returns or anything like that. But that's my take. Derek Ridland's here. Good to see you. The deals are coming, and I'm inclined to agree. And I'll have a list for you guys on the next video of ones that I think are getting close. And as a matter of fact, we talked briefly, just to share, I'm making this list. I'm not going to show it to you because you'd have to watch the video and then I'd lose all the views. But of what we talked about today, I see Shopify on that list. And I also see, did we talk about Netflix for a second? Also see Netflix. Not necessarily run to the bank account and mortgage your house for those names, but I'm just saying those are 2 stocks that we mentioned here today that will be on that list when I record it tomorrow, as starting to get to the point where, you know, the valuation looks certainly much more fair than it was 18 months ago. And Netflix, I'm just a fan of. I don't know if it wasn't that high 18 months ago, but I think that they are underappreciated. I just leave it at that. All right. Trevor Johnson, what's up? Getting hammered on SoFi, but haven't started averaging down. I think that's good. Let me get a drink here. I think with SoFi, you're going to be in the same game that I'm in with arguably DraftKings and Magnite, where there's still a floor. There's still a floor that's lower. Doesn't mean it'll get there, but at the end of the day, as much as we try to package these things like SoFi, trying to think of a similar name. We talked about Affirm, Upstart's another one, where they're getting these shiny packages. SoFi's a bank, okay? They're a bank with a 10 times better app than we have for our traditional banks, right? Fact of the matter is, there will be no profits this year. There will be no profits next year. And the bright side is they're growing, right? So is $13 a fair price for 5 years from now? Probably. But if you're waiting to average down, I don't really know that I would be in a hurry. When was this price to sales? See, this hasn't even been updated. 12.9. You're down from there. No bank has a price to sales in double digits, okay? And before I eat my words, I will just confirm that with a little Bank of America. Price to sales under 5. Let's go back to historic times. That's great financial crisis. How about right here? Price to sales 2x. Tops, right? How about Ally's another bank that I do investing with Ally for a couple different reasons, but I'm not a day trader, so I don't need a whole bunch of like crazy charts and shit. Let's see what Ally was, because they're sort of upstartish. Price to sales, right in there, right? Below 2. So Is there further down for SoFi? Depends on who buys, what kind of support they get. But fundamentally, for a bank, yeah, there's more room to go. So I wouldn't be in a hurry. Does it get there? I don't know. That's hard because that is where you're asking people to pay up for. They're basically going to overlook Ally Bank, just as a simple example, who just announced a stock buyback, who just announced a dividend increase of some kind. Guess what Ally does? They offer an investment account. Oh, they offer checking and savings. Oh my gosh, they do loans just like SoFi does. There's SoFi without an app, plus a much larger client base and a more established company. So I get what's attractive about SoFi, and I wouldn't be opposed to putting a couple bucks in it myself for the long term because I use them at a very small level. But it's shiny packages on the same things we already have out there. They've just done a better job at the user experience. All right. Trevor also says Snow still short and thinking it can make a move similar to Net. Snow, I think, is the one we were talking about. Warren Buffett. I think of all the oddball things out there, Snow is a tech stock that he owns, which is interesting. Big triple-digit growth, 66%. Maybe they get a couple pennies profitable next year. Notice that their next year is 2023. It's going to be a little longer to wait for. This is concerning to me anyway. 100x price to sales. What do we say? We said that on that analysis tab that you have approximately 66% growth. So let's say they hit it. You can chop this in half. That'll be 50 times forward sales. That's getting better, but it's still a lot of speculation. I say Snowflake has room to fall from here. And it's not going to be one for me right now due to the lack of earnings. Lion AT&T, God love you. Showing more life. He only has 500 in it, but the dividend is insane. Might pull that money out and buy more Apple. I would probably do that. But good for you that AT&T is doing something. I've never seen anything in their business objectives that excites me. However, I should say, well, they have HBO, right? So that would be like the one high point for AT&T. But it does look, here's your 5-year chart. Depending on when Lion got in, pandemic low was 29. So if you bought it on pandemic low, you're only $3 down. It was looking ugly at 23. But here's why you're in it, right? $2 a share, at least as of this last update on the website. I just, like, for me, I just don't prioritize dividends. I'll take them. TSM has a dividend. But for the stuff that I talk to you guys about when I'm individual stocks and whatnot, I don't really want that out of my retail account because it's just a straight taxable event. Now, Lion said something about having $500 in there. So, who cares about the taxes for roughly $40? But generally speaking, I just don't want somebody to give me a dividend. I would rather that they invented the next HBO or the next software and turn that into share price appreciation. But that's, everybody has their own style. Thanks, Lion, for the support. Derek had to add some PayPal. Yep, under 180. And I'm watching Etsy too, Derek. So if you guys don't know who's ever watching, I'm big on PayPal, and I think I said it multiple times, but just so there's no confusion, there's a 175, 170 floor in PayPal, in my opinion. Okay, and that is all based on this number. I've been using Seeking Alpha's numbers more, but I am on Yahoo. So 528. All right. So we want to probably get under 40 for our forward EPS, or I would prefer that given this range here. So 30, let's just say that this was the last day of normal in the world. 31 times 528. I have to do that math. 31 times 528, sorry, I'm using a calculator, is 163. That could be considered a floor, but I'm also factoring in lower than normal interest rates, and I'm also factoring in the fact that I think PayPal outperforms, which is an opinion. So anyway, PayPal at 170, or in the 170, I'm buying at 170s. I bought some last week at 170s, and I will continue to do so. And I think the 170s, in my opinion, is getting very close to the floor for PayPal. And then, fingers crossed for me, in particular, that they come out in their earnings and they talk about the good things for 2022. We already know that they're rolling PayPal integration, Venmo integration into Amazon, which I think is huge. Again, just like Visa, PayPal is trying to increase payment volume, and considering the depth of where they sit in the e-commerce world, I think they have a good chance to do that. You can go read people who think that Shopify wallet is going to steal from PayPal. I don't see that. I don't even know if they would have ever bring that up in a PayPal board meeting. That's how small the Shopify wallet is. But for PayPal, the growth is in Venmo. Integration into Amazon at the point of checkout with the Venmo account, I think is huge. And I think that e-commerce is not done growing, and I don't know who would argue with that. And as long as e-commerce grows, digital transactions grow, I think PayPal's in a great place. I really do. And then if you want to get like pie in the sky, you can start talking about the super wallet. Is Venmo a candidate to become a super wallet or phone wallet or whatever the hell the kids are talking about? I think they are. And I'll take Venmo's demographic over Cash App's demographic for super wallet stardom any day. And I think we're going to start to see that play out. And if you, one way to put it is think of luxury, okay? And I'm not saying everybody who has Venmo is rich, okay? But think about luxury brand versus imitation brand, right? The margin on a Gucci purse is ridiculous compared to a Champion athletic sweatshirt, right? It's not really apples to apples, but you get my point. If Venmo can cater to and convince a better demographic for their super wallet, the margins are just better with people who have money. It's just right? Look at JP Morgan versus Robinhood, right? And you'll get an idea of what I'm talking about. All right. PayPal's on, or Lion's on PayPal train. Snow, great balance sheet. I didn't look at that. I can put it up though. And anytime I'm doing a quick look at balance sheet, particularly if I'm on a video and I don't want to bore the whole world, I look at three things. Revenue incoming, which this number will grow. Last 12 months, it was $1 billion. So that's money coming in the house, right? Total cash, holy cow. So 3.89 billion. Total debt, 200 million. So yes, things are definitely, there's no concern about paying the bills here. And there's probably, to be fair, zero concern about any sort of upcoming dilution because they are losing money with this much money in the bank, right? Just through inflation and whatnot. And to kind of think more about this, and kudos to Liam for calling it out, it's a lot of money to go buy something. You know, what do you buy for $4 billion? I don't know. But if you're Snow and you're basically, you're basically connecting disparate data sources, not too different than Palantir, but you're doing it at much more of a commercial level for commercial applications. There's got to be a little nitpicky technology that can improve that to some degree. So with $4 billion, maybe they will do that, and that pushes the stock price. I haven't studied them enough to say. You're going to, yeah, I need a Yahoo Finance hat because I was on there again, is what Chestad says. They do need to send me at least something for my TV to put on in the background. And I do, and I'm going to have a couple more Yahoo Finance sort of like sponsored videos or whatever, because they see that I use it all the time, and we're kind of working that out, so more to come. Great stock, Vortex, Etsy. Love the Etsy company. Used to hold it, sold out when it got on its peak, and I was desperate for wins in 2021. Turns out I probably sold at the right time. However, if we melt down further from today, well, not today as in Etsy, but if we melt down like we see here, right? Etsy is a candidate. They have EPS. They're consistently under targeted with EPS projections. So this 350 by Christmas next year will probably be $4. And I would say that this is probably underestimated too, just knowing what I know about them. So Etsy is a candidate for me. I would be excited for Etsy somewhere in the neighborhood of sub 150 would just be my take. Since I already have gains in it, and I lock those gains in, I would be very, very particular for myself about when I jumped in. But so I'll wait till sub 150, and even at sub 150, man, I'm going to run out of money eventually. I'd have to stare at it hard to think about, is QQQ versus Etsy a better play? But I have nothing but good things to say about the Etsy company and the stuff that I've studied and the different revenue streams that they're building within their marketplace, particularly how they're basically making money by helping people make money on Etsy. It's a beautiful thing. So whereas I feel like eBay in the early 2000s was getting a lot of strife or a lot of uproar for working against their sellers, like Etsy's embracing their sellers and they're giving them add-ons to sell more and sort of scale their business. So I like it. And I think you'll see a lot of, what's the word I'm looking for? I guess devotion is one. Loyalty is a better word. I think that sellers on Etsy are going to stay loyal, assuming they keep that approach. All right. Does ARK have more room to fall? Probably, unfortunately. I don't think it's the worst thing that you could buy for 5 years, but I don't think that this could possibly be the bottom. Let me eyeball this here. We did this exercise recently where we looked through the top 10 holdings, or maybe I did a video. Tesla, more room to fall. Roku, more room to fall. And I'm not saying a lot. I'm just saying, like, would you be surprised if Tesla dropped 10% more given its current valuation? I wouldn't even get out of bed for that news. Roku as well. Teladoc is probably pretty close to their floor. Square's probably right there at the floor. Zoom, I haven't looked at it in a while, but it's not, it's not barn burning anything. We talked about Shopify. I think it's getting much closer. Spotify never understood, so no comment. Twilio has no earnings. It's fallen like a rock. But I don't know. I'm not sure that it couldn't fall more because I don't know what's propping it up in the 200s. Coinbase, I think, at 230 is a pretty decent buy if you believe in crypto. And Unity's getting close to their bottom. 116. They're not going to be profitable for a while. They really don't have that much money. I mean, $1 billion is good. 40% growth, 30% next year. But it's not like next year it goes from 1 billion to 3 billion. So I would be careful. Unity potentially has a floor that's lower than this. I, for one, would feel better if it was under $100. All right. Derek is sending Kathy Wood to prison. Okay. Kathy or Elizabeth Holmes. Hey, let's buy Zillow because it's undervalued. Zillow cuts by 75%, sells it all. That is one thing, not against Zillow because I'm in Zillow, and that's I'll be buying more Zillow in the 50s, perhaps in the 40s, but it's a much longer play. However, it is weird how many times Kathy sells when stocks go down. It's just odd. I've never seen anything like it. Whereas, you would figure like in the kind of hedge fund world, like you're looking for deals and you buy low. It's sort of like she missed the top and then sold at the bottom. It's weird. So I'll say that some of her problems are probably going to be infinitely better as all these people exit for the hills. I think that the management, the amount of funds to manage, the NAV, all that stuff is going to get infinitely better, hopefully to a point that she doesn't have to trade every freaking day because it doesn't seem like that's necessarily been working. But we'll see. We'll see. Trevor, what do you think about Robinhood? He hasn't bought any, but I get stock grants as part of my comp package for working there. Interesting. I would take as much free as you can get. I don't know. I've never worked in a place that offered me stock grants, but I will tell you, I'll give you my 2 cents on what we can expect valuation-wise. If there's one good sign, and Morningstar gave it $33, and they're relatively conservative. But I do want to call something out here on Morningstar. I've been a little disappointed with their refresh ratings, of which there has been very few. Here in 2022, I feel like the game has changed a lot, and Morningstar is not updating as often as I would like. All right, so here's a positive on Robinhood. Big time negative year, but next year inching close to profitability. They say 23%, you're up to $2 billion in revenue. I don't know, man. If I worked there and let's just say I was privy to what's going on and perhaps which features, and I mean, almost certainly you're going to know how the accounts are doing, right? How's user signups? How's engagement rate? If all those are staying consistent, $15 if I was offered free shares or some sort of discount, I'd have to consider that. I think I don't know. It seems like an okay play for the long term. It's not where I invest, but again, you have an advantage, Trevor. You have an advantage of being able to see the internal workings, and you should use that, is what I would say. All right, 18 possible. Kathy knows her stuff. Buy high, sell low. Nice. All right, guys, I think we made it through all the questions. Thanks for coming out. Take a look on Twitter. Usually Yahoo Finance posts those videos and whatever. So you might see my face. Give it a like, retweet, whatever the thing is. It helps me continue to get those opportunities to grow the audience. But hope you guys are doing well. You know, keep some cash, as much cash as you can. I don't think we're done. That would be my parting shot on this one. We may not be done for several months as far as volatility goes. So have a great day, and we'll see you on the next video.